Hey everyone, and welcome to today's webinar titled Navigating the Complexities of Modern Hotel Budgeting and Forecasting. My name is Jason Freed, and I'm the Hospitality Data Evangelist at Otelier. And in a few minutes, I'll be joined by Russell Meek, Senior Director of Product Strategy at Otelier. A couple quick housekeeping notes. The audio is on mute for all attendees, but please feel free to ask questions during the presentation in the chat box below. We'll take about 10 minutes at the end to answer as many questions as we can. Also, this session is being recorded, and tomorrow we'll send an email to all the registrants with a link to the video and slides. Before we dive into budgeting best practices, I want to tell you a little bit about Otelier. Otelier is the hospitality software behind every great host. We optimize performance for hotel owners and operators by harnessing data, easing decision-making, and automating the mundane to release hoteliers back into hospitality. Today we have 3 products. DigiAudit is a back-office automation solution that allows you to streamline night audit compliance and month-end reporting across your portfolio. TruePlan is a budgeting and forecasting tool that allows you to optimize the financial planning process, including year-end budgeting and your regular dynamic forecast. IntelliSight is a modern business intelligence platform that allows you to transform data from all the revenue-generating outlets across your hotels into actionable insights. Over the next 25 minutes or so, we're going to be focused on streamlining your financial planning process using purpose-built hospitality drivers and predictive models with Otelier TruePlan. With TruePlan, you can collaborate seamlessly for more accurate and efficient budgets. Work toward single plans across your portfolio, seeded with historical data to kickstart your process with no manual data mining required. TruePlan allows you to use audited actuals from your accounting system to create plans with the right amount of fidelity. Eliminate manual spreadsheet updates and reduce errors by automatically building and seeding plans from historical data, and build consistent plans across your portfolio together. And that's what we're here to talk about today, navigating the complexities of modern hotel budgeting and forecasting. We're going to walk through how to lay the groundwork for an efficient budgeting process, how to standardize those processes across all of your properties and portfolios, how to automate the data integration from all the necessary systems you need, the benefits of using hospitality-specific drivers, and why a SaaS-based budgeting tool is critical to the process. And now for the good stuff. I'm going to welcome in Russ Meek. Russ is the Senior Director of Product Strategy at Otelier, and for the past year he's been focused on relaunching Otelier's budgeting and forecasting solution, now called TruePlan. Welcome, Russ.
Hey, Jason. Thanks for the time.
So, Russ, you've been in and around hotel operations for a long time. Maybe let's start with giving our listeners here a high-level view of what we're talking about here, right? The budgeting process. This is something that's done annually, I think usually starting around August, depending on who you talk to. Companies try to wrap up by the end of the year, so they have some insight into what their business is going to look like the following year.
That's right. So budget season officially kicks off in August. Some hotel management groups will start later. Many will, in fact, go into the next year and not finalize budgets until January or February of the following year. That's pretty common. We see it all the time. With these new tools, the hope is that everyone can meet their deadlines and report a budget out to their ownership groups much sooner than they typically do.
Yeah. And then, as we're out there talking to our customers, Russ, and we've been monitoring how people are budgeting for years now, what are some of the challenges that we're seeing? I think from my perspective, the one I hear the most is people are still using Excel. And let's talk about the challenges that Excel brings when you're budgeting. What have you seen out there as you've been talking to hoteliers?
Part of the issue with Excel, and it's a great tool, we all love Excel, the versioning capability, right? So you'll send out an initial version of the budget. You really want to get the take from the teams on the ground, right? There's a lot of insight that your housekeeping manager or your front office manager may have as inputs into the budget. So everyone on property must have a version of this. Typically that version gets sent back to an accounting office or a central corporate accounting office. And many times, because those users aren't used to using these types of sheets, these complicated sheets with a bunch of formulas in them, they might break something or they might type over a formula. And all of a sudden, a lot of the drivers or formulas that would drive other portions of that budget are broken or slightly manipulated in a way that you wouldn't have expected, especially when you're dealing with multiple properties. So a lot of it comes down to versioning. These budgets tend to be iterated on over months and months. And going back and forth and keeping track of every little change in Excel becomes unruly once you reach a certain level of scale.
Yeah, because you've got so many people trying to work in the same document, right? You've got user permission issues, and then,
Hmm.
really because it's such a manual, at that point, it's a manual data entry process, right? And we all know when you've got multiple people entering data, the issues that can happen when you're doing that.
Absolutely. Another big challenge that we see is non-standard drivers. Someone from the corporate office or the accounting team may have defined a certain driver, right? It's a formula that calculates based off of, as an example, occupied rooms. And
Yep.
if you don't get that formula just right, or you go off of something that isn't industry standard, you may end up building a budget based on some base data that is basically incorrect. And then to change that at the end of that budgeting cycle is very difficult, right? Then you have to re-explain and re-link everything back and forth. Just making those types of changes becomes really difficult when you're working with a tool like Excel. Again, it's very powerful. We all love it, but it
Yep.
does not kind of give the guardrails needed for this type of collaborative process.
Yeah, 100%. That's a great transition into, we've got some information later on about, updated data, how to make sure you keep your data updated throughout this process. And we'll get to that as well. Outside of Excel, I think, a challenge I always hear from hoteliers is sort of a lack of what I would call a streamlined process, right? So you've got one person, working on this type of budget and entering the information this way, and you've got somebody in another department, F&B or spa or whatever it may be, entering the information in a different way. And then it makes it really challenging to roll that information up into a portfolio-wide budget, I would imagine.
The non-standard nature of our industry makes it difficult, right, to standardize across a portfolio of hotels. So while this might be manageable, and even then it's difficult for one hotel, a large hotel with multiple departments that you're describing, to manage, it becomes exponentially difficult when you're talking about a portfolio of properties and you're trying to standardize the way they're calculating, based off of segmented room revenue as an example, and then
Yep.
cascading that down to your expenses all the way to the bottom of the P&L.
So often, Russ, when we talk about TruePlan, our new tool, we call it a budgeting and forecasting tool. What is the difference between a budget and a forecast? And I'm going to kind of let you're the expert here. I'm going to let you kind of explain the difference between a budget and a forecast for our listeners.
So the budget is laid out for the entire year, typically done in collaboration with multiple departments, and typically is approved by either ownership or the hotel management company sometime near the end of the year. And it's a plan that will drive a lot of the conversations throughout the year. Are we meeting budget? Are we close to budget? Do we need to adjust something? Do we need to adjust our expenses to stay in line with budget throughout the year? That's kind of the plan for the rest of the year. Forecasts are very similar. And in fact, for our Otelier budget and forecasting tool, TruePlan, they are identical. They're just different versions of the same plan. So the benefit you get from treating them the same way is that the workflows are exactly the same. It's not like you restart your budgeting process in August and have to remember back to everything you did the previous August, September, and October to get it to work. Throughout the year, the users are rebudgeting every 2 weeks, once a month, once a week, however often your process requires. And the forecast is typically done with a 90-day lookout. So you'll be forecasting today for the next 90 days. And what that does is it gives you the ability to bring in more insight from the property or from any data source out there that we can consume in Otelier or whatever data source you have. Hey, there's a new concert coming up in 3 weeks. We want to update our forecast. And the whole idea of the forecast is to try to make sure that you meet budget at the end of the year. So your forecasts tend to get more and more aggressive. The data is going to be much closer to near real time. So you'll be able to make better decisions in the short term for the next 90 days compared to what you might have done in October of next year based on today's data versus you might be forecasting for in September of next year.
So it sounds to me like it's a cyclical process almost, right? Like your budget informs your forecast, which eventually is going to inform your next year's budget. Forecasting is just sort of a more dynamic approach to it, which you can change in, like you said, almost near real time.
That's right. We have a third type of plan as well. We call it a what if plan. So many times throughout the year, while you have your forecasting process in place that's very formal and you spend time with your teams creating a forecast every 90 days, well, you do it every couple of weeks for the next 90 days. You can also create what we call what if plans. And those can be turned into a forecast. They can be turned into a budget later. But what you do with these is try different scenarios, right? And you have unlimited amounts of what if plans that you can create. So if you're contemplating a remodel in June of next year, you could create a what if plan. Well, what if we were to close half of the hotel for 3 weeks? How would that translate to our budgets? You can start from your budget, copy it over to a what if plan, zero out half the month's occupied rooms as an example, and then see where you would be against your budget at the end of the year based on that what if scenario. So I just wanted to plug that in. There is a third type of planning in our tool that helps create scenarios like that.
Let's talk about some of those challenges that we identified earlier throughout past budgeting processes and how we can fix some of those as we move into the next budgeting season. And I think that sort of starts with exactly that, finding the right time to build a budget. It's not easy, right? As we said, most of our hoteliers start doing this process in August, and we're trying to help them shrink that process. And there are a lot of innovative ways that they can speed up that process to make it more efficient. But starting with, the time that you set aside to build your budget, it's tough because, as we were just saying, the numbers are always changing. And I don't think you want to, take numbers in August and then rely on those numbers in December when you finalize your budget. So what are some takeaways you have, Russ, for, finding the right time to start your budget and move through that process?
The key is figuring out a way to collaborate. Top-down budgets where one person creates it for the rest of the year without too much interaction with the on-property team members makes it so that they don't own the budget itself. So what you want to try to do is involve more people. So collaboration tools are extremely helpful, and tools that help lay the groundwork for a budget process are very beneficial. We see that hotels that budget tend to do about 20% better than hotels that don't budget, not just on top line revenue, right? Because they've got a goal, they've laid it out, and they're shooting towards it on every decision made throughout the year, even micro decisions, right? They're driving towards a specific goal. And that's really what the budget process is about. Now, as far as timelines, so we can prove out, just based on how many hotels use it, that the time to build a budget, collaborate, get everyone's input, stamp it as final, shrinks if you're using a tool versus trying to manage through Excel with all of the challenges mentioning earlier.
So let me pause you real quick there, Russ. I wanted to go back to something you mentioned. You mentioned a top-down approach to budgeting, which may or may not be the right way to do it. We see a lot of our customers doing the opposite, right? A bottom-up approach where you start with the sort of hotel level with the GMs and the director of sales, what they're seeing in the market, and then, roll it up. Do you see one way or the other working better, or do you sort of need a combination of both of those?
I think it goes back to collaboration. It has to be a two-way conversation. The beauty of using a tool is that you can both recommend down to the property and then enforce certain things that you may want to do, right? So maybe as a hotel management group, you want to enforce a certain percentage of expenses based off of top line revenue. The tool allows you to do that. You can also recommend hey, I think you should be using this percentage of occupancy to drive, maybe an outlet revenue budget. Maybe the hotel will say, well, I think that's a little too aggressive or not aggressive enough. I think we can do better in the restaurant because we hired a new chef or, something along those lines. But again, the tool allows you to lay the groundwork so that you can have these conversations and you're really talking about substantive conversations back and forth about what the numbers should be and what drives those numbers versus trying to figure out if the formula is correct or if we calculated it appropriately. in the worksheet.
Yeah. So that's been great, Russ. So I think what we're going to do now is we're going to show some real examples of how you can do this with a system, right? And we want to start with using updated data to reduce your budgeting time. We've talked a lot about the right data. Russ, what is the best data to start with when you're budgeting? I know we talk about the number of drivers that we have, and we'll get into some of those drivers later, but what are some of those key framework numbers that you need to start with?
Everyone starts with their history, right? So we can learn from history and extrapolate what we might do in the future based on that history. We have no limit on how far you can go back. So as long as we can get the data into our system, we can provide you a historic view of your actuals coming from your accounting system by GL code a year back, 2 years back, 5 years back. And then you can actually initialize your budget. We call it initialization, but basically you're copying over that actual data from the accounting system as the source of record and plotting out a budget based on what you did last year. In many cases, someone may decide to start from last year's budget, or maybe from a budget that was created earlier in the year, right? You start with that initial version in August, you iterate on it, you think about it for a while, you have a bunch of conversations, maybe a few meetings with more stakeholders. And then in November, you might decide, you know what, that budget was pretty good. Let's go ahead and reinitialize and start from that point forward and have another series of conversations with another set of stakeholders. But actuals from the accounting system are kind of the base of where we start with any budget. We can also take in PMS data, revenue management system data. There's all sorts of good data sources out there that you can bring in at the line item level to initialize each one of those GLs.
I was really glad that you mentioned the importance of integrating with the accounting system. My guess there is Russ, because unlike sometimes a PMS or an RMS, you're going to have expense data too, right? All the way down to the P&L. So not only top line revenue numbers, but you're going to be able to inform, how many housekeepers should I put on, for this month based on demand, based on, labor cost as well.
That's absolutely right. So the accounting system's where it all ends up. You may have different POSs depending on the size of your property, right? Many hotels are just a property management system, no other outlets. Great. You can use some of that PMS data to inform the budget for next year. We call it on the books data, but we can pull in future data based on actualized reservations into TruePlan and display that right next to a forecast as an example. You can then use that as the base of the forecast and build on top of it. But the accounting system really is our primary kind of integration that we have for many cases in a two-way fashion. So once you do finalize a budget and a forecast, we can express that back or integrate it back into your accounting system for BI purposes or for whatever reason you might need it back into there. One of the beauties of using Otelier is that we're really good at pulling in data from other sources. And we also have as a backstop the ability to use generic imports to get whatever you already have built, put into the system and start from there.
A lot of times, Russ, will talk about third-party demand indicators and how important those are, right? Should we be looking at our competitive set data? Should we be looking at our market to inform our budget and forecast? When a lot of times what I hear from hoteliers is start with the local market, right? Start with your director of sales. They mostly know what's happening at your hotel. And I think that's kind of what we do with TruePlan as well, right?
That's absolutely right. That's a really good point. So we have the ability to pull in ComSet data from a variety of sources that are out there. It typically requires another subscription to those data sources. But if you have those data sources that would provide a view of how the hotel's doing over a time period against similar hotels in their ComSet, we can pull that in, display it right next to your forecast. And then, in fact, you can initialize, like I mentioned earlier, copying in that data to lay the groundwork for a more informed budget, a more informed forecast.
Okay, Russ, this is super interesting to me. The idea of hospitality specific drivers. Explain what that means. I know there are a lot of budgeting tools out there that a hotelier
Hmm.
could use, some of them, not specific to the hospitality industry. What do we mean by using hospitality specific drivers and why that's so important?
I would say this is our number one differentiator. This is where we've spent the last 15 years building up very specific drivers that are basically formulas, right? We call them drivers, but they're formulas that could be built into an Excel spreadsheet that will help drive different portions of the P&L based off of different portions of the P&L. So you have a few examples up here. But we can take rooms available and decide on a particular expense that would be driven off of the available rooms, not rooms sold. Rooms sold should likely drive a bunch of the different line items after that. These drivers are hospitality specific. They're built for hotels, for F&B operations, for spa operations. They're very hospitality driven. They are not generic off the shelf budget and planning tools that you would get from, like you mentioned, there are other tools out there are not geared towards the hospitality industry. They can be used and many organizations use them, but they often struggle with trying to build up these formulas the way that they would expect to use them in a hospitality environment. Hospitality is special, especially accounting. Accounting and hospitality is slightly different than everything else.
Then I'm assuming here, Russ, that the benefit is once you've got these specific drivers built and these formulas built, that you change, if you have to update one and you change it in one place, that it's changing throughout all the different versions of the budget that you have throughout your company.
That's right. So, and I'll be careful here. It's not so much about the different versions because you could have multiple versions using different drivers, right? Again, those what if
I see.
type plans will allow you to do what if scenarios. Now, what's really powerful about this is that you can change one number, right? You can take your occupancy number, or let's say you were to make a goal of we're going to uplift our ADR by $2 during the weekday for the next 6 months. What would that mean for everything below that, right? So all the way down to your housekeeping expenses for the rest of the year. And instead of having to change your ADR in one place and then go through a bunch of worksheets to update all the way down, changing the number in one place will automatically link. We link everything and then it automatically updates all the way down to the last GL account that might be linked to this particular driver. Does that make
I don't
sense, Jason?
That makes 100% sense. And I don't know how you would be able to do it without a tool, to be honest. I don't know how you would be able to do that with everybody's managing their own separate Excel spreadsheet and trying to roll that up multiple times at the end of every week or month or whatever it may be. Seems challenging.
It is very challenging, and that's why it typically takes so long, months and months of collaboration and double checking to get things done. And at the end of the day, what really ends up happening is that hotel organizations end up simplifying their budget to the point where the fidelity or the quality of that budget is eroded because, oh, let's not change this number because it's going to take us 10 days to get it propagated down to every department
Yep.
and double check everything instead of, hey, we have a really valid reason why we should be changing this number and we can even prepare a sample budget that would express that, and then we can double check it and make sure that everybody is in alignment with that new number top to bottom.
Okay, awesome. So up until now, mostly, Russ, we've been talking about the annual budgeting process. I would hope that hoteliers have it wrapped up by this time of the year, and that the next step, right, is taking that budget and turning it into a dynamic forecast. Tell us a little bit how you do that, even if you want to talk about how do you do it in TruePlan. What are the steps to take this budget that we've just finalized and turn that into our forecast that we can update regularly?
We see a wide spectrum of organizations deal with this in certain ways, right? So many of the organizations, when we first start with them, they will do an annual budget via an Excel spreadsheet process that we've been describing. And that's it. They decide not to forecast because it takes too long. It's too many hours. There's diminishing returns on trying to put that together every 3 weeks. Many of them will be doing a quarterly forecast, right, for 90 days, every 90 days. And that seems sustainable for mid-sized organizations, even if they're using Excel or some other tool. What we've seen, though, is as they start to use the tools, they're able to do this more periodically, right? So many of our hotel management groups will do it once a month for the first year or two that they're using the tool. And then they get even more aggressive down to every week, right? We've got large organizations doing a forecast of the next 90 days every Monday. It only takes a few minutes. Once you know how to use the tool, you can pull in that on the books data from multiple sources. You can take a look at your comp set data and update a forecast for the next 90 days within a few minutes, again, every Monday as an example. Republish that, make sure everybody is driving towards those numbers across the organization.
Yeah, that makes a ton of sense. And I think some of the things that we've got bulleted here on this slide may be taking it a step further, right? So I think as more travelers book their hotel stays online and through third parties, we've got to be measuring some of that to see how that's going to affect our oncoming demand. Maybe the booking window is shrinking and, we're seeing more bookings within 3 days when traditionally we had seen them a week or two out. Those things will shape your hotel forecast. As well as I think a lot of our customers are seeing F&B business return. We're seeing that ancillary spend come in through travelers that are looking for experiences, whether that be F&B or spa or golf, and that all affects your upcoming forecast as well. So there are additional data points that we can bring in, as you mentioned, Russ, to help you get even more detailed with your forecast.
Absolutely. Yeah. So traditionally, the hotel revenue would inform a lot of your other outlet revenues. But with a tool, you're able to then have kind of a feedback loop coming back the other way. So your restaurant might actually inform some of your hotel revenues. Your spa may inform some of your hotel revenues. Having all this laid out with linked drivers across the board lets you go in any direction, right? So the spa director might come through and say, hey, there's a huge spa conference coming in. We've just got a bunch of bookings in the spa. Let's see if we can capture some of that in room revenue over the next couple of months.
And then lastly, I think, Russ, we've seen a transition here where maybe at one point we were looking for our forecast we were only forecasting top line revenue. We were looking at some of those things you mentioned, demand generators that are bringing new people to the market. But we're now forecasting profitability as well, or all the way down to the bottom line, right? So we want to, yes, make the hotel more money on the top line, but we want to make sure that revenue is flowing to the bottom line and not eroding somewhere in the process. All right, Russ, now's when it gets super exciting. We're going to take all the things we just talked about over the past few minutes and show how they come to life in TruePlan.
Okay, let me share my screen here and get into a quick demo of TruePlan. As an outline, I'm going to create a 2024 budget. I'm going to take my 2023 budget, copy it into that new 2024 budget so that I capture all the formulas I spent all last year refining with the teams. Then I'm going to modify it a bit. Ultimately, we're going to finalize it and make it read only so that no one will touch it throughout the year once it's been approved. Okay, so as you can see, I've logged into TruePlan, and the initial display will allow you to navigate to all your properties and all your plans. You can click on a single property and view all its budgets, all its forecasts. On that same note, you can navigate by plan and select, okay, I want to see all the budgets for all my hotels, all the forecasts for all my hotels. This is very useful as you are going through a budget cycle to see if a particular property has missed a deadline or hasn't created their budget, who was the last person edit it, when they edited it. And it's just very useful as you're going through your budget and forecasting cycle. So as we can see, the Courtyard has not created a 2024 budget. So let's go through and take a look on how we would create that 2024 budget. Now, up at the top, we have a couple of bulk actions, and we're going to click on Create New Plan. I'm going to give it a name. I'm going to give it a description. I'm going to select the property. We have the ability to select the plan type. So as you can see, you can create a budget, forecast, and what if plan. And I'm going to click budget here. I'm going to select the fiscal year of 2024. The starting period will be January of 2024, but just a quick note, we do support non-standard fiscal years. We're going to set it up as monthly just to keep it simple, and we're going to represent weekends and weekdays. I'm also going to set the as of date to January 1st of 2024. I click create. The new plan has been created. I'm going to go back to my screen here and click refresh, and you can see right there that the new 2024 budget has been created. Next up, I'm going to click into the plan. It's going to bring it up, and we're going to take a look at a few things. So you'll notice over to the left, we've got a view of January, and over to the right, it's a full year view. You can click through the months up at the top. Now you'll notice this budget is zeroed out except for available rooms. That comes from the configuration. Okay, so first up, I'm going to set up a comparison view here. You'll notice this column over here is all zeroed out, but I can compare to another property. I can compare to actuals. In this case, for the webinar, I am going to compare to the 2023 annual budget. There's only one version in here. I'm going to click through here and click OK. And you'll notice it's going to load up the 2023 budget into the comparison column for me. I should have very few variances once I begin to populate the 2024 budget with the 2023 numbers. But you will notice there is a variance on rooms available. That 124 rooms is coming from February because it is a leap year. There's one more night in February, and that's where that 124 variance comes from there at the top. Okay, so next up, we are going to initialize room revenue, which basically means we're going to take the 2023 room revenues, we're going to copy them over into the 2024 budget. So first up, we have the ability to copy from different properties. We're going to leave it at the same property. We could pull in actual data from the GL accounting system, but in this case for the webinar, we're going to pull it in from a 2023 budget. So I'm going to click annual budget here. I'm going to click 2023, and I'm going to select that same version we were just setting up in the compare column too. For today, we're going to pull in all periods because we're setting up our budget, but you could pull in just a single month if you wanted to. You can pull in all segments or a particular segment, and I'm going to grab all rows and click proceed here. Okay. Next up, I'm going to click edit again, and I am going to initialize line items, which is everything else other than the room revenue. Same deal here. I'm going to select same property. I'm going to pick my 2023 budget, which is what we're comparing to. In here, we have the option to either copy the values from the 2023 budget into the 2024 budget, or we can bring in the driver amounts, meaning we're going to copy over the formulas and then have it recalculate. So that's the option we're going to pick here. We have a third option to do a reverse calculation based off of some default configuration on the chart of accounts. But again, for today's purposes on the webinar, we're just going to go with the driver amount. We're going to select all periods. We're going to select all departments, and I'm going to select all rows because I want to bring everything in to this new budget that we're setting up for 2024. We have the ability to pull in comments, but we're not going to do that today. And I'm simply going to click proceed and start the initialization process. It's going to pull in everything from the 2023 budget into the 2024 budget. And you'll notice our variances are now set to 0 all the way down because the two budgets match. There is a slight variance you'll notice, and that's because of the February leap year extra day in there, the 124. So some of the OTA commissions are calculating in there based off of the available rooms. All right, so now that we've set up our budget the same as 2023, I'm going to navigate over to the room revenue tab. It breaks down our room revenue by market segment. There are a few different ways that we can do this. First up, we can type right into the total here where the 786 is, and I can type in a number. So let's just say I wanted to take that up to 800. I can go month by month, add a little bit of room nights for our bar market segment. There is a really neat feature here where it automatically calculates and shows you in green what has changed based off of typing that number in. It allows you to see what you're doing as you're going along and you don't have to hit save to see it happen. There is another way to do this using our little calculator icon, where I can go in, select rooms, and increase my bar rate rooms for all months by 3.5%. I'll select percentage here. Click OK. And now you'll notice it even tells me there are increased rooms by 3.5% in all months. Also highlighting in green so you know what's going on. Now I'll save it, and the plan has been updated with those new amounts. I'm going to quickly navigate over to line items so that I can take a look at my payroll just for a minute. For the purposes of the webinar, what I'm going to do is pull up the Night Auditor GL code, and I am going to reduce number of hours per day that I'm budgeting from 8 to 7, pretending like I can reduce that shift by 1 hour next year. I'm also going to reduce number of dollars per hour that I'm paying that position to 13. Maybe there's some market conditions that are allowing me to do that. Maybe I have a highly trained team that can get through night audit quicker. I'm maybe going to take next year and try to tighten up my night audit role a little bit, and that's what I've just done here on the plan as we went along. You can see that the value changed there for my night audit role. I'm going to click save, make sure my changes are saving. And that's pretty much it for setting up a budget, making a few edits. I'm going to go back to the main screen now. And the final step through the budgeting process is to mark it read only so that nobody touches it throughout the year once we've made all our changes and everyone is in alignment and the final budget's been approved. And that wraps up the demo portion of our webinar. Let's transition over to the Q&A.
Thanks, Russ. I really appreciate you seeing what the tool and that process actually looks like. So we're finally to the Q&A portion. I know a lot of our viewers have been asking a lot of really great questions, so let's really dive in and get to it, Russ. Let's start at the top here. So Carl wants to know, does forecast take over the business on the books?
So we can pull in on the books data and either seed a forecast or what's the best way to say it? Layer it right in where it's right next to your forecasting plan. And then that will inform whether you do an increase or decrease to certain line items based on that, right? So typically it's for room revenues, and you can put it right next to there and decide whether you tweak something up or down on your forecast from the on the books data.
Oh, that makes sense. Great question here from Stephanie. So what if you're a new property, Russ, and you don't have historical data?
It's a great question. So we get that all the time, right? Especially with new builds. There's a lot of new build hotels out there. We do have a generic import. So you could take whatever you're building in Excel and using the generic import tool, you can pull in a historic plan. What we do is typically we'll use something like comp set data, right? We'll compare it to other hotels. There's certain vendors out there. I won't name any today, but there's certain vendors out there that have comp set data that the hotel company can purchase, and we can put that together and input it into the system.
Yeah, it makes a ton of sense. Another good one here from Andrea. What about payroll, Russ? Do we have full-time equivalents like FTE?
We do. So we've got FTE drivers that are built into the system for the labor planning areas, and we can link the hours to drive wages, and you can input the pay rates in on every one of the positions and calculate based off of any of the other drivers. We've got a list of drivers that deal with payroll and labor planning.
A number of questions here, Russ, about integrations, and I wonder, Cassie wants to know if we connect with accounting systems like M3 that she uses, and I think we had an earlier question about a product called, I don't know, it's a Navision. Can you talk about our integrations, our strategy in general, Russ?
Yeah, absolutely. So at Otelier, we're always looking for integrating with the next system that's going to help solve problems for as many hotels as possible. We do today connect with M3, with NetSuite. We've got a long list of integrations that our account management and sales team can provide as you start those conversations with those teams. I can tell you with Navision, I saw the question pop up here, and I did a quick search to our integrations list, and we have built integrations with Navision before at Otelier. I see none that are active today, so I don't want to overpromise here. We'd probably need to do something to it because it was a few years ago that we did do that work, but we have worked with them before, so we'd be willing to work with them again, of course.
Apologies if I already asked this one from Andrea about forecasting. How do we feed your on the books, and how do you evaluate your pickup?
And so that's a great question. So today our on the books is basically put right next to your plan. You can pull in on the books from your PMS, typically from your PMS, from a revenue management system, and we will put it right next to your plan. And then it would be up to whoever's sitting in that seat to make the right decisions on reach and what the pickup would be based on what is already on the books. We don't automatically create any kind of algorithm that would figure that out. We see that more of kind of a revenue management tool type job. So we don't get into that, but we will consume it if you have some kind of algorithmic way of getting to that appropriate reach from a revenue management system. We're willing to consume that and feed it right into the system so you can pull it into your forecast.
All right, I'm looking through here. It looks like those are all the questions we have for now, Russ. Everybody feel free, if you have additional questions, to email us. Either Russ or I are available to answer any of your questions that come in afterward. We really appreciate your time today. Thanks for being with us. Again, as I mentioned in the beginning, you will get a copy of the recording for anybody who was with us today. So thanks for the time. Thank you so much, Russ, for taking the time to walk us through the product.
Thank you, everyone.
Talk soon.